Hi friends, this LOS talks about the various calculation impact from a revenue and profit recognition perspective under various revenue recognition principle which we learned in the previous LOS. For example, how does the profits and revenues being recognized under percentage completion method, or for say completed contract method or installment method, etc., etc. So look into various numerical questions on percentage completion method and other revenue recognition principles. Let us look at first revenue calculation question. Mountain Infrastructure Limited has a contract spanning over the next 3 years, so it's a long-term contract. The total revenue being earned of the contract is 20 million USD. So 20 million USD is basically the contract revenue. Total estimated cost is 10 million. So automatically the total profit becomes 10 million. What is the revenue to be recognized in year 2? The total cost of the contract are as above, table given. So first year you spend about 6 million, second year 3 million and 1 million. So you use a percentage completion method, and what would be the year 2 revenue recognition? In case it's, the question talks about the percentage completion method. Now here year 2 expenses are 3 million. Now 3 million has been expensed out of what is the total cost? 10 multiplied by the total revenue, which is 20. So what would be the total revenue being recognized? Would be equal to 0 and 0 gone, would be 6 million. So effectively you will account for 6 million revenue in the second year of operation. Let us look at another example from an installment method perspective. ABC Inc. purchases land at 400 million USD. It sells it to a company for 600. So there is a profit element involved in it. The payment is to be collected over a period of 3 years, and this is how the payment will be collected. First year 200, then 200, and third year 200. Total payment received was 600. Under the installment sales or cost recovery, what would be the right answer? Either A, B, and C. We'll look into it. And they're talking about year 2. Now from an installment sales perspective, the revenues and profit would vary from year to year depending on what is the cash being collected each year. So let's look at all 3 years. So what would be the revenue recognized in year 1? The installment collected is 200 divided by the total number of installment being collected, which is 600, multiplied by what is the profit which is being booked, which is 200. So the first year the profit would be 1/3 of the total installment to be collected. So 1/3 becomes 66, roughly rounding of error. Similarly 66 for the next year and 66 for the third year. Now what happens to the cost recovery method? Now cost recovery method says you cannot book profit till the entire cost has been collected. Now what is the cost? 400 million US. So first year you collect 200 million, your cost is not recovered, no profit being booked. The second year you recover 200, but since you have not recovered your cost, no profit booked. So they're asking about year 2. So year 2, since you are yet to recover your total cost, so your total cost is recovered at the end of year 2. So till then no profit will be recognized, and your answer becomes C. So under installment method, the year 2 profit would be 66, and under the cost recovery, your total profit for year 2 would be 0, since the cost is yet to be recovered.